talking about the changing climate for solar stocks and news that Germany is considering cutting so-called feed-in tariffs that over the past decade have made it the world's leader in the solar industry. My guest is an expert in solar, Gordon Johnson of Hapoalim Securities. Gordon, all right, so we've got this whole situation in Germany where the subsidies that the government offers people to install solar are going down, probably by April, but we don't know what's going to happen. But what are the effects on the stocks right now? I mean, for example, you've got a company you've been following, Amtech, right? ASYS is the symbol. What does Amtech do, and what are the effect on a stock like that?
Yeah, so we like Amtech. We think it's a strong buy. We think there's significant upside to earnings. What Amtech does is Amtech makes it. There's basically a value chain of making a solar cell, and within that process, one of those processes are called diffusion. You need a diffusion furnace to make your solar cell, and that's what Amtech provides to the solar industry. So despite what happens to module prices, despite what happens to margins, these solar companies need to increase their efficiency conversion. And efficiency conversion is basically how much sunlight you're turning into energy, you're transferring into energy. A solar cell is a commodity product. The only way to differentiate yourself is to increase efficiency. Everybody needs to do that. And there's a ton of new guys who are adding a ton of new capacity. And we think Amtech Systems is a company that's positioned to benefit extremely well in this environment. And they're heavily levered to the Chinese module manufacturers, of which, you're seeing significant capacity expansion. So Amtech stock has taken a hit. And we think, people are kind of throwing the bathwater out the window, and all the solar stocks are taking a hit on the German feed-in tariff cut. But we think this is creating an opportunity for Amtech, because despite what happens to the feed-in tariff, every single solar module manufacturer needs to increase their efficiency. And the leader in that market is Amtech Systems. You look at the valuation. On our calendar 2011 numbers, they're trading, you apply a 12 times multiple and you add the $5 in cash they have, the stock's worth $18. The stock's trading at roughly 10 right now. So we think it's trading at a significant discount. It's a relatively, we think, undiscovered gem in the solar industry, and we think they're going to continue to show massive upside to street numbers. Just this week, they announced orders in Q1, our fiscal Q1.
They surprised a lot of people with
59 million in orders. The street had orders of roughly 10 million. So they upsided orders by roughly 6 times. I think it's a massively undiscovered, understudied story, and I think they're going to continue to show upside. So we actually like this stock despite our negative view.
All right, now just so I understand this whole idea of a diffusion furnace and the idea that you're going to use that to improve the efficiency of the solar cells. Did they have any special technology that you can't get anywhere else that makes the solar cells more efficient, that would make you more likely to buy a diffusion furnace from, let's say, Amtech than from a competitor?
Right. So Amtech, they compete with guys like Centrotherm and Roth and Rau, and the answer to your question in short is absolutely yes. Right now they're doing something called P-type cells and then N-type cells. Now they're doing the N-type cells allow you to increase your efficiency conversion much more than the P-type diffusion furnaces they sell. And they have proprietary technology, which they don't have patents on, but that they haven't shared with anyone and will not share with anyone, that I think allow you to get a higher efficiency versus some of the products from some of the other competitors. So I think they do have a differentiated technology. And again, Pimm, if you want to increase your cell efficiency, it doesn't matter if your module prices are going down. This is something you need to do in a commodity industry. They have big Chinese module customers, Yingli, Trina, CSIQ, and we even think SolarFund is one that's coming along for them. Again, we think there's significant upside. We strongly recommend your viewers study this stock.
So talk about this whole idea of the Chinese production, because we're talking about, German consumption of solar projects, but what about the Chinese production? Because in the past, we've talked about this whole idea that they are ramping up big time because the cost differential for making solar cells has really gotten kind of crushed.
That's right, Pimm. Another great point. So the reason why we like this company being exposed to the Chinese is because the Chinese can effectively produce at a lower cost than anyone else. And it's very simple. Labor and electricity in China is cheaper than anywhere else in the world. Your solar cost is a factor of labor, electricity, and polysilicon. Polysilicon everybody buys for the same cost. So if you can get a cheaper labor and electricity cost, you can sell your module as a Chinese producer for less than everyone else. So you want exposure, and again, this is a commodity industry, so the cheapest product is going to be the winner. So you want to be exposed to those guys who are growing and have the low costs, i.e. the Chinese module manufacturers, and that's the key market that Amtech Systems is focused on. That's why we like the stock.
Now, are the Chinese manufacturers, are they just taking advantage of the situation right now and trying to produce as much as they possibly can and sort of almost, they don't really care the price, they just want to grab market share?
Yes, absolutely. And the way to think about this is the way to get your costs down further is the higher your production goes, given it's somewhat of a fixed cost business model, the lower your overall price goes. So in actuality, if Germany doesn't cut the feed-in tariff, they're not promoting actually the shift to higher efficiency modules, because if you don't cut the incentive, it's just a matter of how low you can sell it. If you cut the incentive for solar, then it's a matter of how efficient your product is to get to this grid parity where solar is the same cost as fossil or socket-based electricity. So I think that Germany cutting the feed-in tariff is actually good to promoting I guess, our advancement to grid parity.
All right. So the idea being that eventually we might get to a situation where people look at the efficiency that you're talking about in terms of Amtech as a way to get to this parity.
Exactly.
All right. Now, when you take a look at the domestic market for solar, just get into that just quickly. Are we seeing demand in the United States for solar projects?
We're not, and it's interesting. Recently, First Solar, which is one of the largest companies here in the U.S. and globally, they've had a spate of products that have been rejected and terminated, large-scale utility projects that have been rejected and terminated in the U.S. And the issue, Pimm, is they're trying to do multiple projects of 550 megawatts and above. The largest project ever done in solar in the world ever was 60 megawatts. They're trying to do projects of 500 megawatts and above. And the other issue is that these projects, you're talking about projects that are size 5 times the size of Central Parks. All solar panels 5 times the size of Central Parks, in areas where you have endangered species and areas where you have desert tortoises, which people are trying to conserve, and the cost is just really high. So it's a major hurdle, and that's why we think these projects are getting terminated, and the market's not going to be as big as people expect.
All right. I want to thank you very much, Gordon Johnson, coming in from Hapoalim Securities, really shedding light on the solar industry. Thank you very much.
Thank you,
appreciate the insight.